don't want to say, retail is the new tech or semis, but, you start talking about this kind of profit margin expansion, you're going to catch people's attention. What exactly do you foresee?
First, it's okay if you want to say retail is a new tech. That'd be good. It's been a decade of margin erosion. It's a lot of investment in e-commerce, and retail is getting its groove back. It's for those that have been taking share and making investments. We're seeing the pendulum shift back, and we're going to see margins come back for those who are winning and are making these investments. A lot of it is tech-enabled. As you mentioned, AI was one of those things.
Okay, so are there companies in particular where you see like immediate near-term, like 200 basis points of profit margin expansion?
Walmart's the one that comes to mind the first, and 200, well, let's just say, will be a slower process, a couple of years or several years. But Walmart, you're hitting the nail on the head of several of these aspects of tech diffusion, and on top of it, they're gaining market share. In terms of tech diffusion, AI, easy one of them, big scale, a lot of data, a lot of opportunity to go through their data and enhance both the front end of their business, drive more sales to customers, make things easier, and improve the back end. We didn't talk about it, automation, which is an element of tech diffusion and has AI that's sprinkled into it. They're updating a lot of their DCs to be, let's say, more automated. Over time, that means less people, less resources there. And I've seen the tech with my own eyes. It looks like it works. I know this has been a pipe dream for a while. And the last is this digital media. Digital media, to me, is the recapture of all of the investment we've made online. They're getting the dollars back, high profit margin dollars back through advertising.
And a lot of people have been excited about the prospects for retailers to use this data. And it's kind of the gold mine for advertisers, especially kind of with linear TV not being that so much. So Walmart really stands out for you as being able to capitalize. Who else?
So look, think about the largest platforms. Think about the size of data, the breadth of data, and the size of businesses. That should be first and foremost. So you have Costco's, Target. We mentioned Kroger in this. We talk about Home Depot and Lowe's, given their size and scale. In terms of their category, they're a little more narrow. So the amount of dollars that advertisers would spend won't be as much in theory as a Walmart, right? Walmart is going to aspire to the size of Amazon, and that's how we think about it. But there should be winners. And by the way, every retailer should benefit in some form or another. It's just how many of these opportunities do you have? And that's what we're trying to do with this report. We're trying to identify the ones with the greatest bounties.
Yeah, exactly. So let's give the example of Target, which has just been struggling, kind of getting, it's got like the lost in the middle problem. It's had some customer issues. Could it all of a sudden turn on a lever like AI to help it kind of get back to the kind of growth that would, make people love the stock again?
It could. I mean, it could be a help. Look, for Target, the question is market share. And I think you mentioned in the middle, right? They're in the middle of Walmart. They're potentially in the middle of them and Amazon. They need to take market share. When they're taking market share, when they have their style, when their product is being receptive, when they get that Target, that cheap sheet going, that business, that market will expand. AI will be an amplifier. I don't know if AI by itself gives you that merchandising credibility that they've earned, just as a retailer. That's what I think Target's got to get right, the product. AI will be the amplifier when that happens.
But in essence, you think the benefit of AI for retail is basically the two ways. It's automation and it's advertising. And
I think it's...
Go ahead, yeah.
Sorry, Kelly. Yeah, I think it's two ways. I look at a front end and a back end. And by the way, this is shaping up within real time, so we're watching this evolve. The back end is both streamlining functions at the company, and this is going to be universal. Every retailer will benefit from automating certain functions. Then for Walmart, the back end includes automation, automating distribution centers. At the front end, it's mining data. And then how much data do we have? You mentioned it. Some of it may simply be their own data. Some of it might be data that they're going to have opportunities across all of their mediums, online, digital, potentially through the Vizio platform, right, when that acquisition closes. So there's going to be data through different manifestations. Who has the biggest pools of data where there's been inertia to be able to analyze it and then sell you across as many different product categories? In Walmart's case, they sell everything. They're trying to become the everything store. So the number of opportunities that they're going to have should be greater than everybody else.
Well, it's also fascinating to think through, again, to your point, this all sounds like it benefits the incumbents, obviously those with the customer relationship, but maybe the big getting bigger. And will we see AI enabling any disruption in retail is maybe a question for down the road. For now, Simeon, thanks so much for joining us.
Thanks, Kelly.
The analysis today, Simeon Gutman with Morgan Stanley.